Welcome to First Time Homebuyer Tax Credit Program sponsored by FirstHomeAdvisor.com. In this slideshow, you'll learn about the Mortgage Credit Certificate Program. We'll cover what the MCC program is all about, how the program helps first-time homebuyers, who is eligible for the MCC program, which properties qualify for the program, where is the program being offered, how do you claim the credit, what other rules apply to the program? And finally, what is the recapture tax and when does it apply? Before we go into detail about the MCC program, it is first important to understand what's going on with the IRS tax credits. The $8,000 first-time homebuyer tax credit from the IRS is no longer being offered. It remains to be seen as to whether or not the $8,000 first-time homebuyer tax credit will be reenacted by Congress. The Mortgage Credit Certificate Program is, however, available in many states, counties, and cities. The MCC program can be claimed each year you occupy the home, keep the same loan, and claim the credit when you file your taxes. The Mortgage Credit Certificate Program is a federal tax credit program from the IRS for income-eligible first-time homebuyers. The MCC program can help you lower your federal tax liability by providing you a dollar-for-dollar tax credit. It can help you qualify for a loan because the amount of the credit can be added to your qualifying income or subtracted from your monthly house payment calculation. It can be a long-term tax credit. It lasts for as long as you own and occupy the home, keep the same loan, and are eligible to claim it on your annual tax return. Here's an example of how the MCC program works. The amount of the tax credit is based on a percentage of the annual mortgage interest you pay on your first mortgage. This percentage is set by the eligible MCC issuer. Based on the following assumptions, the MCC tax credit would be calculated as follows. A loan amount of $200,000 with an annual interest rate of 5% would have $10,000 in annual interest. Assuming a certificate credit rate of 20%, you calculate the amount of the actual tax credit by multiplying the amount of the annual interest times the certificate credit rate of 20%. This results in an annual MCC tax credit of $2,000. The MCC program is offered by the following states: Alabama, Colorado, Hawaii, Indiana, Iowa, Michigan, Mississippi, Montana, New York, North Carolina, Ohio, Texas, and Washington. The MCC program is available from some counties and cities throughout the United States as well. Ask your local homebuyer education provider if the MCC program is available in your area. Do you qualify for the MCC program? To qualify for the MCC program, you must meet the applicable income limits for the county where you want to buy. You also must be a first-time homebuyer, unless you're buying in a targeted area. A first-time homebuyer is a homebuyer who has not owned and occupied a home in the last 3 years. You must agree to occupy the home as your primary residence. You must also meet the lender and other program requirements. It is fairly common for the MCC issuer to require you to complete a homebuyer education class prior to closing your MCC loan. You access the program through a participating government agency, lender, and loan officer. Which properties qualify for the MCC program? To qualify for the program, the property must be located within the limits of the participating government agency who is issuing the MCC. Remember, the program is not available in all states, counties, or cities. The purchase price of the home must conform to the applicable limits for the program. The condition of the property must also meet the lender and other program requirements. It is also common for the MCC program to be limited to use on one-unit single-family properties. Before you apply for the MCC program, it is important to know that there is a potential recapture tax. The recapture tax would be paid to the IRS if and only if you sell or dispose of the home in the first 9 years of ownership, have a gain on the sale of the home, and exceed the income limit for the year in which you sell the home. If you don't sell the home in the first 9 years, exceed the income limit, and have a gain on the sale of the home, there is no recapture tax. Review this requirement with your lender when you apply for the program. You may also want to review IRS Publication 523 for more information about the recapture tax. How do you claim the MCC tax credit? To claim the tax credit, you must have a federal tax liability for the year in which you are claiming. You must also have proof that you have paid mortgage interest on your first mortgage loan. You must file an annual IRS tax return and complete and attach IRS Form 8396. You may be also required to provide proof to the IRS that you have been granted an MCC, such as a copy of your original certificate. For more detailed questions about claiming the MCC tax credit, you should consult a professional tax preparer. Here are a few more tips and reminders about the MCC program. Make sure to ask your local lender or homebuyer education provider if the MCC program is available in your state, county, or city. You'll also want to remember that only those who expect to pay federal taxes will benefit from the MCC program. Also, before you make a final decision, compare the MCC program to your local state bond loan to see which program benefits you the most. You will also want to make sure that your lender and loan officer are approved to offer the MCC program before you apply for a loan with them. Before signing any documents, you will also want to carefully review the recapture tax with your lender. And finally, once you receive the MCC credit, don't forget to claim it each year on your taxes in order to benefit from the MCC program. Thank you for watching First-Time Homebuyer Tax Credit Programs by FirstHomeAdvisor.com. To learn more about the MCC program and other first-time homebuyer programs, please visit our website, FirstHomeAdvisor.com.